Welcome to this SAP workshop. I am Dr. SAP, your instructor, here to guide you through the essential concepts of financial accounting and management accounting, commonly referred to as FI and CO. In this workshop, we'll explore how SAP supports financial and operational management, focusing on key processes and tools that help businesses stay in control of their performance. While you won't have direct access to the system, I will walk you through each step, providing detailed explanations and real examples to ensure you gain a clear understanding of how FI and CO work within SAP. What is financial accounting, FI? Financial accounting, or FI, ensures that all financial transactions of a company are recorded in a structured and compliant manner. This module supports the creation of accurate financial statements and real-time reporting, enabling organizations to meet legal requirements and make informed decisions. Whether handling invoices, payments, or financial consolidations, financial accounting provides a reliable backbone for external reporting. What is management accounting, CO? Management accounting, also known as controlling or simply CO, focuses on the internal operations of the company. It helps businesses analyze costs, track profitability, and allocate resources effectively. CO provides tools to understand cost centers, profit centers, and internal processes, enabling better planning and operational efficiency. It is a strategic module that supports decision-making by offering deep insights into how resources are utilized and where improvements can be made. How do FI and CO work together? While financial accounting and controlling serve different purposes, their integration is what makes SAP so effective. When financial data is recorded in FI, it can simultaneously flow into CO, allowing companies to link their financial records with operational insights. This integration provides a complete picture of a company's financial health and operational performance. What will you learn in this workshop? In this workshop, you will learn the core principles of financial accounting and management accounting. Explore how financial transactions are recorded and internal costs are managed. Follow practical demonstrations to understand key SAP functionalities. See how FI and CO integrate with other SAP modules, offering a complete view of business processes. This workshop is designed to provide you with the tools and confidence to navigate these essential concepts. Through guided explanations and step-by-step walkthroughs, you will gain a solid foundation in FI and CO. Let's begin. Today, we'll explore the fundamentals of financial reporting. Let's start with one of the most critical financial documents, the balance sheet. Balance sheet. The balance sheet provides a snapshot of a company's financial position at a specific point in time. It's divided into three key sections. Assets, everything the company owns, such as cash, inventory, and property. Liabilities, what the company owes, like loans and accounts payable. Equity, the company's net worth, calculated as assets minus liabilities. The balance sheet always balances. This means the assets will always equal the sum of liabilities and equity, reflecting the core accounting principle that every resource is funded by either debt or ownership. Moving on to the second foundational financial document. The income statement, also known as the profit and loss statement. Unlike the balance sheet, this report tells us how the company performed financially over a period of time. It is structured as follows. Revenue, the income generated from sales or services. Costs and expenses, the costs incurred to generate revenue, such as materials, salaries, or marketing. Net income, the final outcome, whether the company made a profit or a loss, calculated by subtracting expenses from revenue. Together, the balance sheet and the income statement provide a full picture of the company's financial health and performance. Here we are in the SAP system. This is the financial accounting overview, where we can manage various key financial reports and transactions. To begin, let's navigate to the General Ledger Accounts Master Data. This is where all the financial accounts of the company are stored, categorized, and maintained. We're now in the Manage GL Account Master Data application. This is where we can search, filter, and update accounts within the company's chart of accounts. Each account here plays a critical role in the financial structure of the business. Here, we see the entire chart of accounts. Think of this as a comprehensive list of all accounts used by the organization. These accounts are divided into categories, such as balance sheet accounts and income statement accounts. Let's filter to find a specific account. Here we've selected a specific balance sheet account, 111000000, which represents a bank account. As shown here, the system has successfully selected the bank account. This ensures that the account is now ready for further actions or review. At this point, we instruct the system to retrieve the details of the selected account by pressing Enter or clicking the Go button. Here we see the details of the selected account, which is categorized as a balance sheet account. Balance sheet accounts have a unique characteristic: their balances are carried forward into the next fiscal period. This means that the starting balance of the current period depends on the closing balance of the previous period. For example, the cash balance in a bank account evolves over time, as it reflects the transactions from past periods. In this context, analyzing the bank account's balance helps us understand the organization's liquidity. A positive balance indicates available cash, which is an asset, while a negative balance suggests an overdraft, meaning the company owes funds to the bank. This perspective is critical for monitoring and managing financial stability. Here we're entering the account 6110000 in the search field to locate it within the system. This account represents salary expenses, and the system will display its details once the search is completed. At this stage, the system recognizes the salary account alongside the previously entered bank account. This demonstrates that the system supports simultaneous searches, enabling users to view and manage multiple accounts at once with greater efficiency. Now, we proceed by pressing the Go button to execute the search. This action retrieves the details for both accounts, ensuring they are ready for review in the next step. The search function confirms that these accounts are active and properly categorized. Here, the system displays the details of both accounts: bank account, a balance sheet account, and salary expenses, an income statement account. Both accounts are part of the chart of accounts YCOA. A chart of accounts is essentially a structured list of all accounts available for use within an organization. It can be shared across multiple company codes within the system, facilitating reconciliation, summarization, and easier financial consolidation. The first account, bank account, is a balance sheet account, meaning its balance is carried forward to the next fiscal period. This ensures continuity in tracking assets, liabilities, or equity over time. The second account, salary expenses, is an income statement account, also commonly referred to as a profit and loss P&L account in SAP. These accounts focus on financial activities within a specific period, such as tracking revenues and expenses. The account salary expenses is specifically used to record salary expenses, a key operational cost directly tied to the company's workforce. By capturing this information within the income statement, organizations can analyze profitability and financial performance for the defined reporting period. Both accounts exemplify how financial data is organized within the chart of accounts, ensuring clarity, consistency, and accuracy in financial reporting across the organization. To proceed to the next steps, we need to return to the main menu. Here, we can see the SAP icon highlighted with a red marker in the top left corner. Clicking on this icon will take us back to the system's home screen, allowing us to prepare for the next exercise. Let's go ahead and navigate back.
In this lesson, we explored two fundamental types of accounts in the general ledger, one of the main components of the FI module: balance sheet accounts and profit and loss accounts. We understood how each is organized in the SAP system and their significance for the company's financial structure. Balance sheet accounts, as we saw, ensure the continuity of financial records across fiscal periods, while profit and loss accounts capture financial data for a specific period, enabling detailed analysis of revenues and expenses. With this, we conclude this chapter. In the next lesson, we will dive deeper into how these accounts integrate with controlling and contribute to financial performance analysis. Thank you for your attention, and see you in the next lesson.